So it's a great moment, good people we meet for this session of financial reporting. So today we are going to look at agriculture and farming activities. That is concerning on how the agricultural farms prepare their own books of accounts. So let's say that you are a farmer, then you are doing, let's say, poultry farming, you are doing crop farming, and you are doing livestock farming. That is an example. So remember that you have to maintain your books in order to track what you are carrying out, so that you can be able to determine if you are making a profit or you are just making losses. So remember that when you prepare books of accounts, they are very important for decision making. So for the start of this topic, I have to introduce with a bit of terminologies before we go to the preparation of the relevant books which will be required. So the terminology number one is all about biological assets. So the biological assets. So when we talk about biological assets, we say that these are living plants and animals. So it's all about the living plants and animals. So these are some of the handwritten notes which I prepared. So it's only that they are not typed, but I prefer handwritten to be more better without a lot of errors here and there. So agriculture and farming activities. So I was saying that we start with the terminologies. Like now, number one, we have the biological assets. So biological assets, it's all about living plants and animals. So when we talk about biological assets, so we have said that biological assets are living plants and animals. So, and for you to recognize these biological assets in the books, so we say that an entity should recognize biological assets in their financial statements. That is obvious, but now under which circumstances an entity should recognize these biological assets in the relevant statements? So the only point whereby these biological assets can be recorded is when there is a future economic benefit expected from the usage of the asset. So if there is a future economic benefit, if there is a gain expected in the future, that is what we say by future economic benefit. Then if the market value of the assets they are measured reliably. So if the market value of the assets are measured, so then if there is control, the entity must have control or ownership over the biological assets. So that is all about biological assets, whereby we have said it's all about living plants and animals, and they have to be recognized in the financial statements. And we have talked about circumstances under which they can be recognized. Then we have family labor. This is another terminology. So let's say if you are doing a poultry farming, and as the owner of the farm, you are the one who is providing labor. So family labor. So how can we record this in the relevant statement? So family labor should be expensed in the income statement, and it should be added to the shareholders' capital. So why are we doing this? Remember that when we talk about being expensed, it's like now you are paying yourself. But in real sense, remember that there's no money which is going out because you are the owner of the business who is providing labor. That is why we go ahead and add that amount to capital. So you capitalize the amount which you were supposed to pay someone else. Then we have a family consumption or shareholders consumption. So let's say now you are doing poultry farming and then the family has consumed some chickens. So what are you supposed to do on this scenario? So you treat the amount, the relevant, remember that after measuring the value of that relevant chicken, you treat the relevant amount as revenue. So it's as if you sold. But after you have done that, you will go ahead and treat that amount again as drawing, so that to cancel out the amount you had already recognized as revenue, because there's no revenue you gained, it's the family which consumed. So treated as a revenue in the respective revenue account, as well as drawings against the capital account. Then we have the workers' consumption, so treated as revenue in the respective revenue account. So remember that the workers have consumed, so the workers have consumed your product in the farm. So what you do, you treat as if you sold it to them, but remember that in real sense, you never sold it to them. They just consumed, let's say if it's chickens under poultry farming. So after you have treated the amount as revenue, you have to recover it from their salaries and wages. And it will come to offset each other. Then we have intereconomic activities. So intereconomic is whereby you find that, for example, you are doing livestock farming and you are doing crop farming. That is an example I'm giving. So from the livestock, you would find that there's manure, which is taken to the farm, and a crop to be specific. Then from crop farming, you will find that we have some livestock feeds, which are being given to the livestock. So that is the interchange between the two farms. So between the livestock and the crop. So the department which is sending, like now, livestock was sending manure to the crop farming. So on this scenario, livestock will treat this amount as revenue. Then the receiving department will treat that as an expense, and vice versa applies. So that is the case. That is the case. Then now we can be able to do the question. So this is just a short introduction for farming and agriculture under the financial reporting. So before we go to the question, if there is another question from the class, you can be able to put a clause so that we continue. So from my end, this is the relevant question I'm going to do. From my end, this is the relevant question. So they are saying that the following trial balance was extracted from the books of David Wekesa, a farmer, as at 31st October 2019. So we have inventory for dairy cattle, maize, dairy cattle feeds, a fertilizer. We have land and building, tractor, other cattle, that is bulls, a cat, a net book value, purchases, dairy cattle, fertilizer, that is for maize, for Napier grass. Maize seeds, we have a dairy cattle feeds, cells, we have for milk, we have dairy maize, green maize, we have dairy cattle, manure, crops, expenses. So we have Napier grass, that is rubber. So general expenses, trade payables, capital, cash at bank, dairy cattle expenses, so medicine, labor, and other expense. Additional information. Number one, as at 31st October 2019, that is inventory as at 31st October 2019, were valued as follows. So we have the dairy cattle, we have the maize, other cattle, we have the dairy cattle feeds, we have fertilizer for planting maize. So number two, during the financial year ended 31st October 2019, the following distribution of farm produce were made. So maize consumed by the family members. We have milk delivered to relatives, hotel. Number three, we have manure valued at 600,000 was removed from the cow shed and used in the maize plantation. Maize stocks valued at 1.5 were used as dairy cattle feeds. So cattle bulls are used for pulling carts. Depreciation is to be provided on tractor and carts on the reducing balance method at the rate of 25% and 12% per annum respectively. Income tax is estimated at 3.6 million. So this is the maximum requirement they can ask you to do. these are the requirements in any exam under farming, which you can be told to present. So that is the revenue account, income statement, and statement of financial position. So to interpret a bit about the additional information number one, it was concerning inventory. That is a closing. Then additional information number two, during the financial year ended at 1st October 2019, the following distributions of farm produce were made. So maize consumed by family members. So family consumption. Family consumption. So for the family consumption, remember what we said here. You treat that amount as revenue in the respective revenue account. Like now, which type of revenue account is this? Remember that Wekesa was doing livestock farming and crop farming, because I can see most of the things you are provided in this question concerns livestock and it concerns crop. So which means that maize consumed by family members, it would affect crop farming. That is the relevant crop revenue account, to be specific. So what we'll do with that amount, it's all about you treat that amount as revenue in the respective revenue account. Like now there we have is a crop revenue account, as well as drawings against the capital account, as well as drawings in the capital account. Then milk delivered to relatives, hotel. Milk delivered to the relatives, hotel. Who can try this? Milk delivered to the relatives, hotel. So the milk delivered to the relatives, hotel. Someone? So remember that a relative is within just the family. So what we can do there, remember that again, we have to treat that amount as revenue. And at the same time, we have to do what? We have to treat it as a drawings. So we recognize that amount as revenue. Then again, we recognize it as drawings, because it was just like a family consumption. So number three, manure valued 600,000 was removed from the cow shed and used in the maize plantation. That is one of the inter-economic activity. So which means that under livestock, this amount of 600 would be treated as revenue. But under crop, this amount will be treated as an expense. Number four, maize stocks valued 1.5 were used as a dairy cattle feeds. Again, this is another inter-economic. So under crop farming, 1.5 would be treated as revenue. But under livestock, this amount would be treated as an expense. Number five, cattle bulls are used to pulling carts, so that is fine, there's no explanation there. Then depreciation, again, that is a bit direct. Depreciation is just an expense, so it can never affect the respective revenue account, but the general income statement for the farm. Then income tax we will subtract after we get a profit before tax. So we can start with the relevant revenue accounts. So which I've said we have two revenue accounts. We have the crop revenue account. Then we have the livestock revenue account. Because this is what Nekesa or Wekesa. These are about what Wekesa was dealing with. That is what Wekesa was dealing with. So I will come here and say David Wekesa. So David Wekesa. So I will start with the crop revenue account. So crop revenue account. That is for the year. So our financial year was ending on 31st October 2019. It was ending October 2019. So that is fine. So what I will do, I can even do both of them at the same time. So I will come here and say David Wekesa. In order to avoid the wastage of time, I will say David Wekesa. So livestock. So livestock revenue account. So the livestock revenue account. So that is for the year. For the year ending. So 31st October. So our financial year was ending on 31st October 2019. So I will be doing the two of them, the revenue account, concurrently. I will be presenting both of them concurrently. So we start from a crop revenue account, whereby I have to start from sales. So whereby I have to start from sales. So for the sales to record, they are just for, let's start from crop. So the sales from crop, we have a sales here. You can see we have milk, that is for livestock. So we have dairy maize, that is the first one I will record under the crop. Green maize, that is another one. Dairy cattle, that one will go to the livestock. Then we have manure. So manure will go to the livestock. So I think you have the question, so we can now record. So we have a dry maize. There's this aspect of dry maize, and there was green maize. So dry maize, it's 36,000. And this one is 11,340. Then under livestock, we have a milk, so the sales. I think you realized we have milk, we have dairy cattle, and we have manure. So this one was 27,360. The second one is 8,100. The third one is 3,000. So you can add the two. Like now you can start from crop. So 36,000 plus, you can give me the answers. 340. So I'm getting 47,340. Then for the livestock, if I take 27,360 plus 8,100 plus 3,000, I'm getting 38,460. That is okay. Then the next thing, we go to the cost of sales. So we raise the cost of sales. So even the cost of sales, just you raise the items which are for crop and the one which are for livestock. So for the cost of sales, so even here we are talking about cost of sales. So for the cost of sales, you know that you start from opening stock, you add purchases, you raise the closing stock. Opening stock plus purchases minus closing stock. So let's start from opening stock, and the stock is the same as inventory. So this is the relevant inventory. Our financial year was ending 31st October 2019. So which means that it was starting on 1st November 2018. So for the crop, I can see I have the maize and I have a fertilizer for maize. So maize, that is growing maize, and the fertilizer, that is for maize. So I can record that one under crop. So that is inventory. So for inventory, I have maize. So maize is 3,600. Then we have for the fertilizer. So the fertilizer is 1980. That is fine. So then we can add purchases. So we can finish with the crop before we go to the livestock. So we add purchases. So for the purchases, we go to the question again. We check what is there. So for the purchases, I can see we have some items here. So for the crop, I can see we have fertilizer for both maize and Napier grass. So who can tell me what's Napier grass? Why is Napier grass used?
Livestock.
To feed livestock, but now remember that it's just from the farm. It's from the, when you do crop farming is when you are planting Napier grass. So you can even be planting for selling. So it's not that a must you plant for feeding your livestock.
Yeah.
Yeah, so it means that this specifically is from the crop. So fertilizer which was being applied to maize and to those Napier grass. So we have a fertilizer. So the fertilizer, so the one which was applied to maize and the one which was applied to Napier grass. So I would just say Napier. So that is, this one was 2160 and this one was 4,000. That one is 4,000. Then after that, we have to raise the closing stock. So we have to raise the closing stock. So what about the closing stock? What about the closing stock? So the closing stock is from the additional information. The closing stock is from the additional information. So from the additional information number one, we have the inventories as at 31st October 2019, whereby I can see we have maize, we have fertilizer for planting maize. So we have maize and the fertilizer for planting maize. So those are the two I will record as closing stock under crop. So we have the maize and we have the fertilizer for planting maize. So which is 2,700 and this is 1080. This is 1080. That is 1080. So we can go to the livestock. So we start with the inventory. So under this livestock, I think now you have checked what we are supposed to do. So under this opening stock, which is all about the inventory at the start of the year, I have the dairy cattle. I have the dairy cattle. So that is 54,900. You can check from your question. I think you have the relevant question. Then we have the dairy. After the dairy cattle, we have the dairy cattle feeds. We have the dairy cattle feeds. So that is 2520. Then we have to add purchases. So the purchases, again, you pick direct from the question. It's only that now you have to make sure it's for livestock. So under that purchases, I can see in my question here, there is a dairy cattle. There is dairy cattle. So which is 10 for 40. Then we have dairy cattle feeds. So we have the dairy cattle feeds. So the dairy cattle feeds, that is 6120. Then finally now I have to check additional information number 1 and raise the relevant closing stock. And subtract the relevant closing stock. So the relevant closing stock, in addition information number 1, again you can check. There is a dairy cattle and there is dairy cattle feeds. There's dairy cattle feeds. There's that dairy cattle feeds. So dairy cattle is 54,000. And the next one is 61. That is 6120. 6120. So you can add.
1620.
So what are you getting under Chrome? Remember that all of these things I've recorded, like now under livestock. Anyway, maybe I can show you what I have done. Under livestock, what I have done under cost of sales. Remember, we have started with this inventory. We have started with this inventory. We have started with this inventory. So under inventory, we can see we have dairy cattle and we have dairy cattle feeds. Then under purchases, you can see there's dairy cattle and there's this dairy cattle feeds. Then after that, we went to additional information number 1. Additional information number 1, there's this dairy cattle and there's this dairy cattle feeds. So that is fine. So I'm asking, what are you getting here? Like now, cost of sales for crop. Cost of sales for crop is
79.60.
So cost of sales for crop is 79.60.
76.90.
Or there's something we have ignored, because I can see we have 36, 19, 21, 64,000. So if we go to the purchases, I think there's something I've not recorded there. So under purchases of that crop, there's this maize seeds. So add 1080 maize seeds. That is what I have not included here. So if you add your answer with the 1080, what you are getting, just add 1080. Yes? Do I have to compute again? So 3600 plus 1980 plus 2160 plus 4000 plus 1080 minus 2700 minus 1080. Sieka, what are you getting?
90/40.
90/40. That is correct. So then if you take your 47,340 minus the answer.
That-
38,300.
So that is 38,300. So 38,300. So this is our gross revenue. This is our gross revenue. So do the same for livestock. 54,900 plus 25,20 plus 10,440 plus 61,20 minus 54,000 minus 61,20.
$18,360.
That is 18,360. I think everybody is doing these computations. Subtract from 38,460.
2,100.
So that is 2,100. That is 2,100. So that is the gross revenue. So after getting the gross revenue, we have to add some incomes. We have to add some incomes. So add other revenue, which I consider as other income. So other revenue. So the same here, we have to add other revenue. So the first thing I have to record as revenue, I have said that it's all about maize consumed by family members. It's all about maize consumed. Maize consumed by who? Family members. And this amount again would be treated as drawings. So it was 1080. So other than the maize which was consumed, there is another inter-economic activity whereby you would find that there is some maize stocks transferred or taken to feed livestock. So number 4, maize stocks valued 1.5 were used as dairy cattle feeds. So remember that under crop, this one would be treated as revenue. But under livestock, this would be treated as an expense. It's the same additional information number 3. Manure which was taken to the farm, that is under maize plantation. Under livestock, it would be treated as revenue. But under crop, it will be treated as an expense. So that is what I have to record here. So transfer to livestock. So transfer to livestock. So the transfer to livestock. So the transfer to livestock is just 1,500. Then we have to raise expenses. We have to raise expenses. So some of the expenses we can check. We can even start from the additional information. So the first expense is all about this additional information number. Additional information number what? So remember, this is crop. Crop was receiving manure. So this additional information number 3. So this manure, which was removed from the cow shed and used in the maize plantation. So transfer from livestock. So that is the first expense I can recognize there under the additional information. So the transfer from livestock. So the transfer from livestock. So here I have shillings. I have shillings there. So transfer from livestock, it was 600. So that is 600. Then another expense. So let's go to this statement, the trial balance. That is, we check expenses which are there. So I can see crop expenses, the one for labor and other expenses. So we have the crop expenses. So the crop expenses, the one for labor and the one for other expenses. So for labor, it was 6480, and this one is 720. Then finally, we can check. So there's this Napier grass labor. Napier grass labor. Because I said it's not a must that Napier grass was supposed to feed livestock. Maybe David Wekesa was planting the Napier grass for selling to generate some revenue. So that is why I have to record under crop. So the Napier grass, the labor. So labor, you know what's labor? So that is 1,000. So we are done with those expenses. So you can add 3 expenses. So 600 plus 6480 plus 720 plus 1,000. I'm getting 8,800. 8,800. So I'm supposed to subtract from what I'm getting after the computation up there. So 38,300 plus the 1080 and 1,500.
4880.
So then the final answer after you subtract the expenses, the 8,800. So the net revenue.
32080.
So that is 320.
32,080.
So 32,080. 32,080. That is correct. Any question before I go to the livestock revenue account so that we can finish the remaining part of the livestock revenue account? Any question? So the first thing we have to record is all about milk delivered to relative hotel. So after we record here, remember that it would be treated again as drawings. So milk delivered to relative. So this one was going to the relative. So we just write in short to know that it's relative. So it is 4320. So you can just write at the end there because it's like an income. So then we have another intereconomic transfer to crop. transfer to crop. There was that manure which was removed from the cow shed and it was being taken to crop. So then after that, we can raise expenses. We can raise expenses. So the expenses which we can deduct is all about transfer from crop. Transfer from crop. So what was being transferred from crop is all about the maize stocks. And the total amount for those was 1,500. So the 1,500. Then we can check it another expense from the trial balance. Another expense from the trial balance, which were affecting specifically livestock. So there's this dairy cattle expenses, medicine, rep, and other expenses. Dairy cattle expenses. So that is dairy cattle expenses. So for the dairy cattle expenses, we have medicine. There's that one for labor. And we have the others. We have the others. So the medicine is 1080. This one is 9480. And the last one is 1440. So do the computations very fast. So those expenses, the total expenses,
$13,500.
so this is 13,500. Then the net revenue,
$11,520.
11,520. I think that is correct for everybody. That is correct for everybody who is in this session. So now after you are done with the first requirement, so remember that this is what they were in need of, the first requirement. They were in need of the revenue account. And that was part of the work which was involving, because it was 6 marks. Then after that, you do income statement and a statement of financial position. Then we can say that we are done with this question. So let's go direct to the income statement. Let us do the income statement. So for your income statement, you have to start from the revenue. So I can just write here without a lot of information, because you know the heading. It's all about, I'm doing an income statement. So the heading, you know, is that you could have said David Wekesa income statement for the year ended. So that is, if you want to write the complete heading, you say that David Wekesa income statement for the year ended, because the income statement is for the year ended 30th October 2019. So we have to start from the revenue. So from crop and from the livestock. So from livestock, I can see here is 11,520. So crop, it was the revenue, which is
32,080.
32,080.
080.
It was 32,080. So the total of these two,
$43,600.
43,600. So that is 43,600. Then you raise expenses. You deduct the expenses. So now the expenses here are just the general expenses for the farm. The one which would be affecting both the livestock farming and the crop farming. The one which are both, generally for the farm, that is. So like now I can see there is this aspect of, before I go to the trial balance, let's check additional information. So remember that under inventory, if you can realize, I never used these other cattle, bulls. I have not used it anywhere. The 5,400. So they said down here, note 5, cattle bulls are used for pulling carts. And if you can check up there under the trial balance, you can see we have other cattle, which is bulls. And those are assets to the entity. So other cattle, the bulls, other cattle, they have said bulls. So which means that they did their valuation, the value of those cattle, which is bulls. After they did their valuation, right now you can do valuation of your relevant livestock. The amount you can sell now, and even the amount you can sell them tomorrow. So on the trial balance, it was 6,000. But if you look at the end of the year, the valuation of those other cattle, which were used to pull carts as per note 5, it's 5,400. So which means that they have lost the value by which amount? 600.
100.
So that is an expense. So the loss in value. So the 600. Loss in value of other cattle or bulls, to be more specific. Then another expense which is general here is the one which was general anyway. They say the general expenses. This one, 10,800. Anyway, before I talk about the general expense, there's another one down here under the additional information. Let us finish with the additional information first. Additional information number 6. There was this depreciation is to be provided on the tractor and carts on the reducing balance method. So depreciation on the tractor and the mukongoteni. I think you know carts, the mukongoteni. So that is the tractor, and we have the carts. So this is all about 25%, and it was 12%. So the value of the tractor is under the trial balance. Is it on the net book value? Because they have said the reducing balance method. We have to be careful on that. Yes, it is on net book value. So the tractor and the carts are on net book value. That is correct. So which means that they had already deducted. They have already deducted accumulated depreciation. So if it was on cost, they could have provided accumulated depreciation. They could have provided accumulated depreciation. So you could have taken that cost minus accumulated depreciation, then you multiply with the depreciation for the year. That is how the reducing balance method goes. You have to deduct accumulated depreciation from the cost so that you get the net book value before you multiply with depreciation for the year. But already here they have deducted. That is why they gave you the net book value. So the net book value I can see there 32,400 and 3K. So this is 32, 400, and 3,000. So do the computation. Do your computations there. So 0.25, 0.25 times 32, 400 is
8,100.
8,100. So I can see this class is having around 8 students. So the others, mko wapi? Anyway, I'm assuming that you are just listening and you are getting everything correct. So for the 0.12, that is a 12% times 3,000.
360.
That is 360. Those are some of the expenses. So add the three expenses. There's no another expense. There was another expense I have not recorded. Yes, there was one which is general. The one I said that let us finish first the additional information before we record the general expense. So the one which is 10,800 from the trial balance. Now you can add and get the total expense. General expense is under the trial balance. The others we have recorded is from the additional information. So you are getting 19. So
860.
that is what I'm getting there in my calculator. So 19,860. If you deduct from 43,600,
23,740.
so that is 23,740. So that is the profit before tax. You raise tax, that is income tax, deduct income tax. But if it was an exam situation, those 3 marks, you could have scored some few minutes when you started this income statement, because these points are even around 10. So they can be marking 1 entry for a 1 mark. So they only need 3 entries. But now because there are many, they can be marking at a half. So they would need around 6 entries for you to score 3 marks. So it cannot go to 0 point something. It can be a half or 1 mark for 1 entry. So I was talking about tax under note 7. You can see there's income tax of 3.6, which you were told you were supposed to pay. So minus from the profit before tax. So I'm getting here 20,140. So that is the profit after tax. So let us finish with the statement of financial position. So this one I can say David Wekeza. So we have the statement of financial position. So the statement of financial position. So as at 30th, that is 30th October 2019. This is when our financial year was ending. So we start from non-current assets. So non-current assets. So the non-current assets, this one you are just direct from the trial balance. So which are non-current assets we have here? I can see we have land and buildings, we have tractor, we have the bulls, We have the other kettle. So let us record. So run and building. So I can just record, then I display so that you can. So anyway, we have run and building. So run and building is at 90,000. 90,000. Then what about the tractor? 32,400. Depreciation was
8,100.
8,100. Remember that it was on a certain percentage, 25%. I think so. Then after that, there was this. There was that Ataketru. But remember now, Ataketru, would I record this 6,000? The bulls.
No.
I will record 5,400, because that is their new value.
Yes.
Which is given in the additional information number 1. That is why the loss of 600 we recorded as an expense. So we have 24. This one is 24,300. Then I can see there after the tractor, I have recorded other kettle. Then we have the carts. So the cart, this one again was depreciated. So the depreciation was, we deduct.
360.
Depreciation was 360. So you can deduct that one. So 3,000 minus 360. 2640. Then we go to the current assets. We go to the current assets. So for the current assets, inventory. So inventory now you take from additional information number 1. Remember we talk about closing inventory. The closing inventory. It was question 5. So the closing inventory, 54,000 plus 2,700 plus 1,620. Remember that I'm not recording data get through here. So 1,620 and 1,080. Are you getting 59,400?
Yes.
So 59,400. Then there was cash at bank. This was direct from the trial balance. So the cash at bank is
15,300.
So up to that point, you say total assets. Then after that, we talk about capital. You can see on the other side here, capital and liabilities. So we start from capital. The capital is? Yes, Martin. Capital is from the trial balance.
163,080.
That is 163,080. So after that, you add your net profit, the one we got from the income statement. It was 2140. I think you remember that.
Capital is 15,620.
Capital is, so let's confirm. Let us make it just specific. So capital is this one, 1st November, 163.08. It's correct. It's 163.08. So net profit, the one we got from the income statement. Then now we need to raise drawings. These are some of the items you recognized as revenue. The one which was concerning family consumption. The maize and the milk, which was taken to the relative.
5,400.
So 1080 plus 4320. So it was 5,400. Additional information number 2. Additional information number 2. You know, this one you have to deduct. Then there was no non-current liabilities, but there is current liabilities. There's these current liabilities. So for the current liabilities, we have the trade payables. So the trade payables is, are you seeing that? 15,620.
Yes.
Then finally, the current tax, it is under the additional information they were supposed to pay. The rest additional information, they are supposed to pay a current tax of 3,600. It's obvious, it's obvious a liability. It is obvious a liability. So you say total capital and liabilities. Total capital and liabilities. So check if the equation is balancing. Assets.
Capital and liability,
197,040.
197,040.
So 197,040, which means it's balancing, because for the assets, I'm getting that 197,040. And that is how you were supposed to do this question of farming. So the main thing for farming, it's all about you understand on how to do the revenue account, of which when you are doing the revenue account, the items you have to use in those revenue account must be just specific to the relevant revenue account which you are preparing. Then after that, you do your income statement, which will be containing the relevant incomes and expenses for the general organization. Then you finish with the statement of financial position. So in your exam situation, you can be asked to do this. Other than this one, you can be asked about those terminologies. Like now, in the year 2014, May 2014, question 4, they asked you to talk about circumstances under which a biological asset can be recognized in the books. So we talked about those circumstances. So if there is future economic benefit expected from the usage of such an asset, the fair value of the asset must be measured reliably, and there must be control by the entity over that biological asset. Assignment, go and do May 2014, question 4, but now part B of the same. So this is the solution which is here, but I would like for you to do first before I share this answer to your WhatsApp group. And that this one comes to the end of today's class. So that was how short it was. And that is all you need to know. That is all about you need to know concerning farming. So when we meet next time, I will be introducing a more serious topic, which is either published accounts, that is published financial statements, or group accounting. So we need to do those two topics before we do partnership and branch. Then once we are done with that, I think you could have been well prepared to do your exam. So continue with your revision. If there's any question, you can ask before I end the meeting.